Hi everyone, and welcome to Market Technicals at Large with Mulot. This is another special edition where we get to do analysis of the pairs which involve Great Britain pound as usual. Now you'll remember that the past 2 days, which was yesterday on Monday and Friday, we did two analysis on Great British pound against the US dollar. Yesterday we did a pair on Great British pound against the Canadian dollar. So the trades are still running because of the signal was triggered today. I told you that you have to enter a trade while the market breaks that line. You remember the line? And then I told you that if you dare and enter the trade while the market is still above the line, then you'll have a problem with the market. The trade will hit your stop loss. So thank you guys who listened, and then thank you again to those who entered the trade today, because it seems like the signal was triggered today. Now, today we will consider the Great British pound against the New Zealand dollar. For those who don't know my name is Telby, surname Mulochwa, and I am a professional investor, meaning that I trade full-time on Forex market. Now, without wasting any time, I would like us to consider our basic elements of analysis. And remember, we'll only do technical analysis on this market. No fundamental analysis. I say this every day. Fundamentals are specified within the technicals. They are there. When you do technical analysis, the fundamentals will take place during the movements of the market. So if there's a certain part or a certain area of the market that is considered to be a support, remember, that area will never change. Even if the news comes out, it will be affected, but then the market will always move in the direction that was supposed to move with it on technicals. So technicals, they hold about 70% of the market. So keep that in mind, please, guys. Please. Now, let's do an analysis on this and see if we can generate a signal already. Okay? I hope everyone is with me on this. And remember, we are live. You can see that this is Forex. It's connected. You can see my same name over there, Mlochwa. That's my same name. So don't say, oh, this guy is doing the analysis while the market is out. You can see the green thing there. It means we are live. Okay. As usual, I'll begin by looking for active supports and active resistance of the market. Usually, I only look for active supports because especially on this part where we will see an uptrend, because I know that some of you can see that we are going to consider a short position on this market. Now, if we were looking at a downtrend and then the trend was at the end, we will consider a buying part, and then that means the resistance will be very important to our analysis. Now, because of this was an uptrend, I'll consider supports most of the time. Now, I'll begin by our strategy. You know our strategy. You start by looking for active supports. So here you can see trend line. For those who doesn't know trend lines, you really need to get the basics of Forex. There's a trend line. Everyone can see that. Now, I'll make it visible. I just like it when my things look more colored like this, because I can differentiate more easily. Now I have that on my market. Now I will indicate important points which will enable me to say that this trend qualifies to be an uptrend. Now, what are those points? Those are the points where the market touches the trend line. Now, someone may ask, how many points should I see on the trend line in order for me to conclude in saying that the market was on an uptrend? At least 2 points will confirm that the market is an uptrend. So now I already see 3 points. There is another point. I'm sure everyone can see that. So I do this quick because I'm assuming that everyone who is watching this video understands what the markets are all about. I told you last week, guys, that please, if you don't understand the basics of the markets, you need to contact me. Some people are contacting me. There's a lot of them lately, so I'm working with them, explaining what Forex is to them, so that when they come and watch my videos, they understand what is it that I am doing on the markets. So moving on, I'll highlight these points. You can see the first point. Go on to the second point of the market. Remember, these 3 points directs us on the validity of the trend. Yes, we have at least 2. Remember, at least, it means from that particular number or more. At least 2. So I already have 2, and then we're going to 3. You can see that we have 3 points which will validate this market as an uptrend. So we can see now we are dealing with an uptrend from this point up to this point. Now, those of you who watched my previous video will definitely know what we do after this. We go here, you can see, we take the Elliott wave. The Elliott wave, we started from here. That was the first highest point, second, third, fourth, and the fifth. So now our Elliott wave is complete. Now that means from point 5, the market is completely changing the direction. Okay, I hope everyone understands that. Now, what I did is I went to, you can see those are my patterns. I went to my patterns and took specifically Elliott wave, and then I drew that pattern there. You can see starting from 1, it goes to 2, 3, 4, and 5. At point 5, we expect a change in the trend, meaning that we have to consider a downtrend from point 5. Now, you guys, you can see that I'm using a spatial platform to do my analysis. So most of you will say, why we don't have these things on our trading platform? No, mine, it is spatial and I pay for it every month. So if you need this, you'll have to contact me, and then I'll give you the guys who can give you this kind of a thing. Okay, guys, let's move on. You can see this is 1, 2, 3, 4, 5. The trend changes direction. And now, after this, the guys who were with me on the previous analysis, because I was doing that live also, you will remember that from that we insert a Fibonacci retracement, and it's a special one also. You can see it's written MTI there. It's a special Fibonacci. We started from the previous low, which is the lowest point of the market, considering that part which is highlighted, or considering that point, the first yellow point on the market, or the first active supports on the market. So I'll do that, and then I run my Fibo up to 0.5. Everyone can see that. and from there I place this here. Now this is, or this line was a resistance of the market, so meaning that the market was experiencing difficulties on breaking that line. So but the market broke the line. You can see that when moving from 0.4 to 0.5, the market managed to break the line. You can see that moving from here to there, the market managed to break the line, and then it came back. So the signal of a short trade is at 1,7851. It's a rate, guys. That's the rate that I'm calling there. You can see. Let me highlight this line. The rate here, there, 1,7854, and then you enter a short trade there. You can see that the market already passed the line, and then it's right here. So the market will continue moving in this direction until this point. So here on the 0,618, we will see a temporary retracement. It's where the market retraces, and then it will just go there and then come back. Now, please guys, this is very important, very important. So here you will see a temporary retracement around this area. I tell guys every day when I do this analysis that this point is very important. The 0,618 is the very most important point that allows us to predict things like take profit, because of now sometimes, like on this point, the market can do anything, can retrace. And then if you are familiar with things such as Fibonacci expansion, you perform that, you will know that the market will definitely reach another point from that. So here you will see another retracement, and then from here the market will move on up to this point. So the market had turned on the black point there. You can see this line is black, and then the market is expected to reach this line also. Okay, but then expect a retracement on 0,618. For as far as risk management is concerned, we need to place our take profit there. So most of you will realize that we are a bit late for that, because you can see the rate here or the market has already moved towards that point. So I'll just place a line here, and that line there, that's the line for take profit. As the line for take profit, you can see that that line will act as an active support. Most of you will agree with me if they know what I'm talking about. This line will act as an active support for the market. The reason is this. Remember, that will be a temporary support. You can see that these points were resisting the market previously, so now they will act as supports of the market. I'm quite sure that everyone can see these points. Okay, those 2 points. Now the market here will definitely bounce back when it gets here. So now, how many pips away from this line? We can calculate that. You can see it's 1,7654, and then that will be subtracted from this veil, which is our current rate. You can see that the market is moving now. We will calculate that. That is 1,7754. Let me search my calculator quick and do the calculation. What's that now on my screen? Okay, that is 1,7754 minus 1, 7654 equals to. So from here to here, to this point, let's calculate again. That will be 1,7754 minus, that is minus 1,7654, that is equal to, as I told you that we have, the answer was this, right? You can see that the answer is 0,01. Now what does it mean? What does it mean? You have to check how many numbers do you have after the comma. We have, or we considered how many numbers after the comma? We considered only 4 numbers. That is 7654. So it's 4 numbers after the comma. So that means here, after 0, after 1, there is 2 zeros. Now that means we are looking on 100 pips from our current rate to the take profit. So 100 pips, there you can see, that is profit in price interest points. Those of you who doesn't know what pips are, it's price interest points. And if you're not sure of that, or if you don't understand what is it, please feel free to contact me on this number. I will definitely help you. You can ask your friends. They ask me every day and I help them. That's my number. Contact me there if you don't understand what I'm talking about here. Now, that means now we know that the market can be entered here, and this is how much you will get: 100 pips up to 0,618. Remember, I'm just saying 0,618 because I'm looking at these possibilities which might happen. The market might bounce. When it breaks this part, it's another opportunity of another profit. You look at this level. So this is the first take profit on 0,618. So the first take profit, I will denote that. The first, or let me just write take profit. Take profit number 1 is at this rate, which is 1,7654. That's your first take profit. Now, when the market breaks this part, you will then look at your second take profit. The second take profit then will be here at this rate. Let me highlight the rate first, or let me highlight the take profit. This is your first take profit. The second take profit will then be on this level. Please guys, I hope you understand what is happening here. Why this level? Because you can see there's a point here, there's also a point here, there's also a point here. These are important points. So it tells you that the market can retrace on these points, because these points were supports previously, especially this one was a support. Now, as far as risk management is concerned, you can see that the market will experience difficulties when it gets to this rate. It might retrace back and start a new trend, or breaks the path. Now, when it breaks it, you also go on and consider another take profit. So this is take profit 2. Remember, that will be confirmed when the market breaks the level 1,7654. Also have take profit number 2. Everyone can see that 1,74 1.87. All right. Now moving on, let me highlight that with a green color. Moving on. Now we can, when the market breaks this level, you also consider another take profit. Another take profit will be at this level. Please guys, I hope you understand what I am doing here. This is very important, guys. It's only risk management. You know that this is a very risky market. Everything you do, you need to do it with care. Please guys, do not take chances. I'm talking from experience. You will lose a lot of money here if you don't manage your risks very careful. Now we also have another level here. So this is our third take profit. Let me take this here, move the market this way. That's the first. That's the second. And then now the third. The third take profit. So it's take profit number 3. Sorry, that's 3. And then you can see the rate there is 1,7189. Okay, I told you that. Let me just write the 5, the pipette. Told you that the last digits is a pipette. It's like a millisecond, seconds, milliseconds. No one will mind the milliseconds when checking time. Maybe some guys will do. Guys who are precise in everything they say, who tries by all means to avoid uncertainties, will definitely say, or will definitely mention the milliseconds when calling time. I wouldn't do that. Okay, moving on. You can see it's take profit here, take profit. Now, we know that from the current level to this level, we calculated the pips there. So the pips will be this rate minus this rate. Let's calculate the pips. So the current rate, which is 1,7758 minus 1,7654 equals to, those are 104 pips. So 104 pips, that should be written down just here. So 104 pips. We are looking at 104 pips. We be specific, say profit. Change the color of that. Okay, let me just leave it on black. So profit for this one is 104 pips. And then now from here to here, estimated profit, remember these numbers are estimated. So it will depend on which rate you enter your trade. So depending on the rate, the profits will vary, but then they should not vary by 10 pips. Maybe 4 pips, 5 pips, it's understandable. Okay. Now, profit. Let's calculate that, this minus that. do that very quick. 0.78, 51, subtract 1,7487. Okay. Okay, it means 1,7654. I hope I didn't do mistake here. Minus 1,7487. Yeah, 167 pips. So you can see that it's 167. 167 pips. 167 pips. As for another target, 167 pips. And then we go to the third target. The third target, we say that is 1,7159.5. Okay, that will be 7,7487 minus 1,7189. You see that? So that is 1,7487 minus 1,7189. That is equal to 298 pips. 298 pips. So profit when the market breaks this level. Please guys, please listen to me. When the market breaks this level, you can then target this part. When it breaks this part, you can then target this part. Please guys, please, you have to manage your risks. Don't be greedy, just manage your risks and then you'll make profit in the forex market. Please. Just have to wait for the confirmation. Guys, I'll give you a good example. If you are selling a product to me, and then I tell you that I'll call you to bring the product to me when I have money, you have to just wait. You'll just have to wait for my call. You can't just come and give me the product without me calling you. So you'll wait for the call, because the call will definitely confirm to you that I have the money to buy the product. So you cannot just bring your product and expect me to buy it when I did not give you a call. So similarly here, you just have to wait for the call so that you can take action on the market. And the call is when the market breaks this part. Please guys, do not even try to enter the market while it is here. I'm not saying it might go up, it might come down in your favor, but then that is risk. You need to manage your risks. So to do that, please wait for it to break the line, and then if the line is broken, then you enter. And you'll see you'll always be safe in the market. 298 pips. So that is a profit. Pips. All right. Okay. So you add that. It might take a week or so. So that is, let's add this together. The total profit there. So total profit. Total profit in a week. I'm not saying per minute, per second, whatever, that you hear outside there is in forex you can make a million in minutes or whatever. I'm not saying that I'm in the real markets. I will never say that you can make a million in a second. I'll never say that. I think it's impossible. Maybe to others it's possible. To me, nope, it's not. It's not possible. So this might take a week because you know that the market does not move straight downwards, but it goes like this. That's a wave. See the Elliott wave. This is how the market moves. Please, guys. No millionaires in 2 days, no millionaires in 2 weeks. Unless if you have a huge amount of investment, you can make that million in whatever that specific time is. I don't want to specify the time because you never know. So let's calculate. So that will be 104 plus 167 plus 298. That is 569 pips. 569 pips. You can imagine how much that will be. 569 pips. So on standard loss, total profit is a total profit in US dollars on standard loss. On standard loss, you know that my calculations are based on standard loss. Standard loss, we take that, we multiply it by 10. So that will be, just add the 0 there. That's 5,690. That's $5,690. In a week, I think that's reasonable. Remember, you only get that if you manage your risk. Risk management is the first priority in the forex market. Please do not compromise that. Risk management, very important. Manage your risks, then you'll make profit. You don't run for profits, you run for risks. The risks, the ones which will affect your investments negatively. So I told you that I'll never leave my currency out, which is South African rand. So it's total profits, which is South African rands. Multiply that by the current rate. Calculator. I'll just say 13. That's 5,690 multiplied by 13. So standard loss, guys, please. That is for standard loss, guys. Don't say, I'm having 1,000 in my account, 1,000 rands. 1,000 rands won't make you 73,000 rands in a week. It's not possible, guys, please. Only standard loss can do that. So you can see how much is that? 73,970. 73,970 rands in a week. And you become happy. So that means the signal is on. You guys can trade. Signals is on. The signal is on. You guys can enter that. This is the potential profit, but since this is the potential profit as far as this analysis is concerned. From this rate to this part, the potential profit for the market is 73,970 rands and $5,690 for those who use dollars as their base currency. So signal activated, guys. Signal is activated. All we have to do is to manage those risks that I told you that you have to wait. It doesn't matter what anyone says. It's your money, it's your account. You just have to wait for the market to break this part so that you can target this one. Wait for it to break this, you target this one. Guys, please, please, risk management, your first priority. That's the only way you can make money in Forex. If you don't manage your risk, you lose money in Forex. Simple as that. Now, we are at the end of the presentation. We are at the end of the analysis. Remember, you call me on this number if you need help. You call me on this number if you are in need of a mentorship. You call me on this number if you want to subscribe to our signals. This is the end of the show. Good night to all South Africans.